Everybody hear me? All right, good afternoon, thank you. And thanks to GSV and ASU for having me here today. I'm Pat Candianos. I'm the co-founder, one of the co-founders, and the Chief Revenue Officer of Simple Tuition. So, let me just move this forward, thank you. I'm here, Simple Tuition you may have heard of along the way. We've been around about 8 years. We're venture-backed. We have investors, Flybridge, Atlas, and North Hill Ventures. But I'm here today a little bit different than the last presentation where there's no Title IV debt. Our company exists primarily because there is Title IV debt as well as private debt. But we're trying to build a company that helps millions save on billions and then fight $1 trillion problem. So I added a little color in here just because I don't know why I did, but I did. So there's 58 million plus consumers in the US with student debt. Basically, one for every person in the country of Great Britain. There's 20 million college students roughly in school, 38 million out, and the average indebtedness, which we know and see each year, keeps increasing, so it's 25 plus. 737 billion is spent annually on higher ed and college expense, about the same as Argentina's GDP, just to give it some scale. And all of that adds up to what we now know is a debt problem that has eclipsed credit card debt. And I think when it did that, that's when it all of a sudden hit the bells and hit the whistles, and we started seeing it in the Journal and the New York Times, and it's really become, part of the rallying cry, the 1% issues. Debt is a big issue in this country, and there's a lot of energy that goes into trying to solve it. Our company, and you can see the parallel there, Canada, obviously much smaller populations, but 15 billion, Australia 26 billion. Here we are with $1 trillion issue on our hands. So when we started the company, Simple Tuition itself, and yes, do we have a branding issue? Maybe. Come to one of my whiteboard sessions and you can chime in like everybody else does. So we now basically have three brands that we're promoting out into the marketplace. Simple Tuition is the original parent company. We're really focused on helping people do the math, understand what their obligations are, and we do this through a variety of tools, web-based tools, calculators. The real main thing that we do is help people compare and contrast and pick the right student loan when it is time to make that decision. And as you know, the market has changed in a rather volatile fashion over the last few years. So we get into the business, that was a huge opportunity. I see Devin Shane there. He made out well on it back in his days. But the interesting thing is, we used to be able to help parents and students on federal loans, private loans, consolidation loans, you name it. And there was a great desire for those loans, and there were great differences between the products. John Fees is here too, so I shouldn't single out Devin. But the interesting thing is, it's still an issue, right? There's still roughly $8 to $10 billion a year in private student lending that's going on. So we're trying to help folks with tools and with the ability to make good choices and understand, and I hear it all the time, how come that $10,000 loan has this $18,000 number next to it in terms of total cost? People do not understand that there's interest on these loans, that there's a cost to this loan. And that's $10,000, and there's a lot of folks, the horror stories of folks who are graduating with hundreds of thousands of dollars in debt. But our mantra has always been, serve the consumer well, and we'll figure out how to make money. In this part of our business, we do lead gen to lenders, including some of the new startup folks who have come into the business the last couple of years. All of this is for free. The billions is what's being spent. So last year, we acquired Valor Books, which operates a great consumer-friendly marketplace. Valor Books is focused on textbooks, as you would imagine, but we're not a holder of books. We are a marketplace. We're a mini Amazon that's focused on textbooks. We work with all the major providers out in the market, whether they are renters or used providers or wholesalers, new providers. We drive in a ton of traffic into there, and it's expanding out into dorm supplies, other college necessities. It's a great marketplace. We've only had it for 6 or 7 months now, and we're really seeing great results there. So that's now part of the Simple Tuition story as well. But the real interesting thing is really the debt, not the debt that is happening today that people are signing up for, but the debt that people have. And so last year around this time, we created Smarter Bucks, which is the first rewards program of its kind that's focused solely on helping people repay their student loan debt. And we do that in a variety of ways, which I'll come to in a slide or so. But what we try to do is help people make extra payments on their student loan. And if you look at this diagram, you can see that as little as $15 a month in extra student loan payments, you can chop $2 grand off of your loan debt. You can get out of debt 13 months early. It's a really powerful set of math, because the more you lower that principal, the more you lower your obligation, you lower the interest cost as well. So it's a multiplicative effect, and you have the ability to have people start making progress. And so that all sounds good, but to do that, you can't just put an IOU or a reminder. And there's a lot of startup sites that have come out that are savings sites, goal-based sites. We embrace that concept, and we're likely partner with a few of those guys. But it's not just saving for a vacation. This is, how do I do things every day? How do I take advantage of things I do all the time, every day, and have that help me get out of my student debt? So we launched the program. We beta launched it last May. We relaunched it in October. And since October, we've grown, added 100,000 new members into the program. It really is a very, it rings very true to your average 20 to 35-year-old person who has graduated from college and has debt on their hands and is very motivated to do something about it. So, we have a neighbor in Boston, Upromise, which is owned by Sallie Mae. Upromise is focused on helping people save money. When you have a new child, you want to open an account, you want to create a 529 plan, and you want to save for college. We think that's great, but saving and ending up eventually with a pile of, say, $700 or $800 or $1,000 against a $200,000 bill eventually, that's challenging. We're focused on helping people save maybe the same amount, but on that $20,000 in debt. So the percentage of savings and earnings and cash back that we can drive is all proactively going to help chop down that smaller number. And you're dealing with the consumer themselves and their family. There's a kind of family and P2P aspect to it. We're on track, and we hope we're going to hit 350,000 by the end of the year and try to get it up to 1 million in 2014. So we do this through partners. That's really the reason I'm here, is to talk to folks. If you have students, if you have access to students or parents, we're interested in partnering with you. And I see some partners here, which is also very, very good to see. But we're really pretty bullish on it. So how do you earn Smarter Bucks? And Smarter Bucks is pure cash. So if you earn $1, you get $1. Merchant funded. So much like Upromise or other savings, we have a mall type feature, an online shopping component. We have some changes coming to that to pull it to the next level. But basically, anything that you buy, if you go to jcrew.com, I got to speed this up, jcrew, if you go to cvs.com, all of those purchases can be tracked. We share percentage of the cash back or an actual cash back amount with the user. Friends and family. Friends and family, it's your birthday. Instead of getting cash in your hand, have grandma help you pay down your student loan. We manage the connection. You set up an account in our world. We manage that money. You don't touch the money. The money gets paid to your lender or servicer by our platform. So it keeps it pure, and it keeps it clean. And the users have a great dashboard to be able to see all that. Friends and family can also open their own Smarter Bucks accounts and make you the designee for those benefits. And we have a program coming for self-contributions as well. Behavioral, this is pretty cool. This is another reason we're here to talk to folks. There are things you can do, quizzes, you can take a survey, you can engage with brands. All of this can enter into helping you accrue your Smarter Bucks in our world. We also have regular Crush Student Debt giveaways that we have. We also have a partner debit card spend. Every time you swipe that card, so we started Smarter Bank with a banking partner. Every time you use that card, non-PIN debit spend, 50 basis points goes back to you, the consumer. So this is actually every day. Mom and dad, you and yourself, your friends, you could all earn money towards your student loan debt. I guess I got close to it. Thank you very much, and love to talk to you all. And thanks again for being here. Cheers.